Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a wonderful Wednesday so far. Today we're going to be diving into our daily cryptocurrency market update, and there's quite a lot to go over. What we're going to do within this video is we are going to look at Bitcoin, the cryptocurrency market at large, go over some of the news-related headlines involving the cryptocurrency space, some of the progress that is being made, really sort of highlight, like we like to do on every single video, the adoption of crypto and facilitation of it continues to excel. I also want to talk, and we often have done this within daily cryptocurrency market updates. We've been doing this now for nearly 6 months. We've really been sort of highlighting what's taking place in the traditional financial world as we see an ever increasing correlation with traditional finance and the cryptocurrency space. And it's part of crypto, in my opinion, becoming recognized as an asset class, is getting those same actors that are involved in your equities, your commodities, and the other kind of traditional financial world merging over to the crypto space and becoming actors within our space. That's why we've seen, and this article talks about it, a huge correlation between the S&P and Bitcoin. And we are going to be diving into that, also talking about things like the fact that UK inflation is set a new multi-decade high at 6.2%. And there is actually no sign of this slowing down, in my opinion. I think inflation is going to continue. We did see, and we've often spoke about the likes of oil and commodities now being in a kind of bull market. And that's exactly what I think is happening. Yes, we had a pullback from the huge spike up that we saw, but ultimately you have a perfect situation with everything that's taking place geopolitically for commodities to continue rising. And this is going to hurt people in the pocket, and ultimately is going to transpire into markets across the board. And of course, cryptocurrency. The cryptocurrency market is now a part of that. So let's get into it all, guys. We know the story with Bitcoin. We have continuously made sure to stress these are not FOMOing markets right now. Lots of uncertainty. It's very hard to not FOMO into crypto because we all know what the inevitable result of the cryptocurrency space is. It's going to get to the multi-trillions, and we are going to see continuation to the upside eventually. But right now, we're stuck in a very volatile period, given everything that's happening geopolitically, macroeconomically, and of course on a monetary policy level. We have a tightening monetary policy in the form of interest rate hikes. We've received them in the UK. I've had a number of letters about them. And also in the United States and a number of other countries, Europe, are going to do it eventually. They've not done it yet, but it is something that is coming. And, you know, this typically has negative repercussions for the economy on top of high inflation. It doesn't spell for a booming period, if you will, typically. And right now, the reason that you have people upping interest rates is only so they can bring them down later on and continue the stimulus, because this is the game that we are in. We live in a credit system, and that credit has to keep growing in order for the economy to be healthy. So they are going to up interest rates. They are already doing it. They're going to continue to do it until they get to the point where they break something, and then they're going to renege on it and bring them back down, or until the point where something happens. There's been lots of talk of cyber attacks and a number of other things, which is very interesting. We may make a separate video on it. But Bitcoin really right now is caught in this kind of rut. And essentially, you know, we've been sort of trading in this range now for well over a year. We are potentially in a ascending triangle at the moment. I would not necessarily say that it was a horizontal, although potentially you can see this line of descending resistance with your ascending support. You have actually rejected off it, so we could see a move to the downside. There is only really two options for Bitcoin. It either goes up or down. One thing is certain, that it will go to the right. However, you know, don't FOMO into these markets. If you're somebody like myself, I just dollar cost average in and ultimately look for undervalued altcoins that I think are going to realize value in the future. But there is still a lot of uncertainty. This is the next article that I want to dive into. Bitcoin correlation to S&P 500 hits 17-month high. The 90-day correlation between the top cryptocurrencies and the S&P 500 has risen to its highest level since October 2020. Here at the top, we have Bitcoin, and here we have the S&P. And you can see, if you look from the start of 2022, they are correlated very much so. You know, they have kind of spikes, ups and downs at the same time. And again, this is back to the fact that we have traditional financial people within our market. We have institutions, and of course, they mitigate risk across the board in a similar manner. The S&P 500, though, it's almost better that we're more correlated to the likes of the S&P 500 than the NASDAQ, because the NASDAQ is typically your kind of higher beta of the S&P and the NASDAQ. So it's the typically higher beta one, more adverse risk one, lots of tech stocks wrapped into it. But there is a correlation, full stop, between our markets and the traditional financial markets. It's important to remember that, because often when you're looking for reasons why crypto is selling off, the answers do not lie in the crypto space, but rather the world at large. UK inflation hits fresh multi-year decade high of 2.6%. 6.2%, on surging energy prices. February's consumer price index print was above consensus expectations among economists, polled by for 5.9% annual figures, and vastly outstripped January's previous 30-year high of 5.5%. Significant jump. 0.7% jump on inflation is significant, or 0.8, sorry. This is not good. They are going to have to up interest rates to combat this. It's not to any sort of a impactful way. You know, the Fed hiking interest rates with a 7.9% inflation rate in the United States by 0.25%, 25 basis points, is really a token gesture. But it's something that they have to do, and they're going to have to continue to do. They don't want to go too fast. There's this kind of balancing act taking place. And this is why markets are acting the way that they are, because there's a lot of uncertainty across the board. You can see that they're blaming this on surging energy prices, which, of course, is a factor of a number of factors going into why we're having high inflation. One being that they actually increase the money supply significantly, but the volume of money is really what increases inflation, rather than, you know, just printing money doesn't necessarily, because if you just print money, it doesn't go into anything, it's not going to bring inflation, but it's the volume of money going into something. You know, that's why we saw equities from 2020 onwards, March 2020 onwards, do very well, because the volume of money going into them had increased based on the supply and liquidity being more readily available. This is oil. We previously stated that we think that you are going to have a continuation in regards to a bull run for your commodities. This is what I'm expecting. I'm expecting that continuation, given everything geopolitically. I don't think we've seen really the worst of the geopolitical fallout yet. I think it's sort of echoing through. And I think that's still to come. And of course, your markets are going to get affected by that. And really, commodities, high inflation, who does that hurt the most? Retail. And I'm retail myself. You know, if retail's less flush with money, they're going to put less money into markets, takes liquidity off the table. It's all very correlated. It's something that's important to understand. To the DAX, the German stock exchange, or one of them, you can see I'm expecting this to actually continue to the downside, based on just how tethered Germany is, or in bed Germany is with Russia in regards to energy and a number of other things. How Ray Dalio's changing world order thesis fits with Bitcoin. This was an interesting listen. You can get this over on CoinDesk. We did play a clip yesterday of Joe Biden talking about the new world order, the changing world that we're moving towards, the changing economy. And this is something that's coming, and crypto, in my opinion, is going to play a big role in it, or certainly blockchain technology. But we are going to talk a lot more about that in a video to follow at some point. This is DeSantis, says Florida should be willing to accept taxes in crypto. Governor DeSantis said Florida should be willing to accept crypto as a form of payment for his tax office. And this is essentially a trend that we are going to see continue. You know, the second that governments can start accepting crypto for taxes, or crypto payments to settle taxes, you know, it really gets a green light. And we are on the cusp of regulatory clarity for the cryptocurrency space. It's coming at this point. It's already been set in motion. We'll see what the pros and cons of it are. But ultimately, regulation is needed for the next kind of wave of adoption to come for crypto. El Salvador postpones Bitcoin bonds to September. Report after, apart from delaying the issuance of Bitcoin bonds, the El Salvador government has apparently slowed down the pace of buying new BTC as well. It was a very risky move for El Salvador to actually go ahead and adopt Bitcoin at this early stage. Some would argue, okay, well, it's not really that risky given the state of their economy previously, and given that the dollar was crippling them in many ways. But the thing with the dollar is you lose over the long term. The thing with crypto is you can lose over a day, over a 24-hour period. And there is a degree of volatility that crypto still has, being an emerging market. Bitcoin still has being an emerging market. And if you think about the fact that, El Salvador as a government may have bought Bitcoin at sort of 69K, and it's currently trading at 41 or 42, which is 40% down. The country is 40% poorer or less valuable. Over time, I think it will serve them well, but I think, there's a reason that they're postponing things so far. They've also got a lot of pressures being put on them by the likes of the IMF and a number of other people. I know quite a bit about El Salvador and their revolution, crypto revolution, given the fact that I'm quite heavily invested in ALGORAND, and I know what ALGORAND are doing over there. ALGORAND are killing it in terms of offering themselves up as a kind of government solution to blockchain. US Bitcoin mining firms turns to harmful coal waste for cleaner energy. It's amazing the way that Bitcoin miners are coming up with new and innovative ways to make themselves net zero and actually deal with issues, pollution issues by using the energy that would go as access to facilitate their mining operations. It's absolutely innovative and amazing what's going on there. So I fully stand behind this. This is a trend that we're seeing continue. Really, it's always important to remember, even in certain times like this, which we are still in, that crypto is over the long run really only going to go one way. And we see adoption for that and facilitation of that continue on a day-to-day basis. And that's what we try to highlight in these videos. Also, on a week-to-week basis, we like to kind of highlight what's going on a macroeconomic sort of level. And we know what the story is there. High inflation, tightening Fed, it doesn't really, war. They are really the three catalysts for a recession. We've got all three of them. But, there's a degree of, how do I say this without offending anyone? There's a degree of joker. There's a degree of sort of clownism with monetary policy nowadays, because we know that they can just print and sort of solve everything and kick the can down the road and implement various things. I honestly believe the reason that they're upping interest rates now is to bring them down later on when they kind of need to, and also go back to stimulating the economy. It's a credit-based system that we live in, and it has to expand and grow in order for the economy to continue to flourish. So that's really all I have for you in this video, guys. I'm going to love and leave you on that note. If you've enjoyed this content, a like is always appreciated. So is a comment. Thank you very much for watching. Remember, hit that subscribe button. A lot of you aren't subscribed. I'd really appreciate it if you did. We are growing this channel. We will probably be at 100K, or we will be at 100,000 subscribers by the end of the year. So be a part of that journey. Thank you very much for watching, ladies and gentlemen. I'll catch you all in the next YouTube video.